Ever wondered how billionaires invest their money? It's a tantalizing question, one that sparks curiosity in the minds of many. There's an undeniable allure to understanding the financial practices of the world's wealthiest individuals, those rare few who have amassed fortunes of such exceptional magnitude. These individuals, the billionaires of the world, possess a distinctive approach to investing their money. This approach, the key to their financial success, lies not merely in the colossal wealth they have managed to acquire. No, it's not just about the billions in their bank accounts or the expansive empires they have built. Rather, it's about the mindset they adopt towards their investments. It's about the perspective they have towards money and their unique way of thinking about finances. This mindset is one that prioritizes the future. It's a mindset that isn't focused on the immediate gains of a quick investment or the attractive allure of a short-term venture that promises huge returns. It's not about chasing swift, often risky profits. Instead, it's about concentrating on the long run, honing in on investments that have the potential to yield steady returns over a sustained period. Consider for a moment the investment approach of renowned billionaires like Warren Buffett. These financial moguls don't just casually their money into any investment opportunity that presents itself. They don't simply gamble their money away on the stock market, hoping for the best. They don't follow trends or jump on the bandwagon of the latest investment craze. Instead, these billionaires adopt a strategic approach to investing. They diversify their portfolios, thoughtfully spreading their investments across a variety of sectors and industries. They invest in a broad spectrum of opportunities, from real estate and technology to healthcare and consumer goods. This wide-ranging diversification as a safety net, a buffer against the volatile ebbs and flows of the financial markets. This diversification minimizes potential losses and creates a more stable financial foundation. It reduces their exposure to risk and ensures that even if one investment doesn't pan out as planned, their overall portfolio remains robust. It's a prudent approach that guarantees their financial resilience, allowing them to weather economic storms and come out unscathed. Risk is another central tenet of the billionaire's investment mindset. These tycoons understand that while risk is an inherent part of any investment, it needs to be carefully controlled and mitigated. They understand that it's not about avoiding risk altogether, but about managing it effectively. They know how to balance the potential for high returns against the likelihood of incurring losses. They know when to hold back and when to push forward. They understand that maintaining this balance is crucial to ensure long-term success. So it becomes evident that the billionaire's investment strategy is far from reckless or impulsive. It's a calculated approach, one that involves meticulous planning and careful consideration of various factors. It's an approach that is not driven by greed or a desire to amass wealth quickly, but is rooted in the goal of ensuring sustainable, long-term wealth creation. In essence, the investment approach of billionaires is anchored in making smart, strategic decisions. It's about having a clear vision of the future and making informed investment choices that align with this vision. It's about recognizing opportunities, assessing risks, and making decisions that will yield the greatest benefits in the long run. It's about adopting an investment philosophy that prioritizes sustainability over short-term gains. So it's not just about having a lot of money, it's about making smart, strategic decisions. It's about understanding that it's not the wealth one has, but how one uses it that truly counts. It's about recognizing that the true power of wealth lies not in its possession, but in its application. It's about realizing that wealth in itself is not the end goal, but a tool to achieve greater ends. This is the mindset of billionaires when it comes to investing their money. Take Warren Buffett, for instance, one of the most successful investors of all time. Known as the Oracle of Omaha, Buffett's investment strategy is a beacon for many across the globe. His approach, rooted in value investing, is a testament to the power of patience and discipline. Buffett doesn't chase quick profits. Instead, he focuses on identifying undervalued stocks, firms that are solid in their fundamentals, but for one reason or another, are trading below their inherent worth. It's like finding hidden gems in a rocky terrain. Once he spots these opportunities, he buys and holds onto them, sometimes for decades. This strategy has helped him amass an incredible fortune, but it's not just about the wealth, it's about the principle. Buffett's approach shows that investing isn't a sprint, it's a marathon. It's not about timing the market, but time in the market. Buffett's success proves that patience and discipline are key in investment. Then there's Elon Musk, a man who's not afraid to take risks. Musk, a name synonymous with innovation, has made a fortune by betting on the future. His investment strategy is far from conventional, often pouring resources into sectors that many deem too risky or too far off. Take electric vehicles, for instance. When Musk backed Tesla, the idea of electric cars was still a far-off dream for many, yet he saw the potential and invested heavily, turning that dream into a reality and reaping immense rewards in the process. Or consider space travel. With SpaceX, Musk is investing in an industry that many might consider the stuff of science fiction. Yet, his belief in the potential of commercial space travel and his willingness to put his money where his mouth is could very well pioneer a new era of exploration and investment. Musk's story shows us that sometimes you have to bet big to win big. While each billionaire has their unique approach, some common threads weave through their investment strategies. One such thread is the penchant for long-term investing. Like a farmer planting seeds and patiently waiting for the harvest, these tycoons understand that real growth requires time. They don't jump on the latest trends, they invest in value and wait. Another theme is diversification. They spread their investments across different sectors and asset classes. This way, a downturn in one area doesn't wipe out their entire portfolio. Risk management also plays a significant role. Every investment involves some risk, but billionaires know how to balance this with potential rewards. They acknowledge the possibility of failure, but they also know that without risk, there's no reward. Staying informed and continuously learning is another key aspect. The financial world is dynamic, and they keep their fingers on its pulse, always ready to adapt. These themes are not just applicable for billionaires, but for anyone who wants to improve their investment habits. So, what can we learn from the investment habits of billionaires? The answer lies in the stories we've unpacked today. Billionaires approach investing with a mindset of patience, understanding that wealth is accumulated over time, not overnight. They're not afraid to diversify their portfolios, spreading their investments across various sectors to maximize potential gains and minimize risks. Moreover, billionaires appreciate the importance of risk management. They're not reckless gamblers, but calculated risk takers, always weighing the potential rewards against the possible losses. They know that to win big, they must be willing to lose, but not without doing their homework first. Lastly, continuous learning is a key part of their strategy. Billionaires understand that the world of investing is ever-evolving, and to stay ahead, they must keep learning, adapting, and growing. Remember, it's not about the amount you invest, but how you invest. Take a page from the Billionaire's book, and you might just find your own path to financial success.